use the CRT effectively. So for the sake of our brother Ima, I would want to make some notes. Okay. So it's CRT, and then it stands for candle range theory. Okay. And what the theory states is that every single candle on the chart, no matter the time frame, is a range on its own. And what that means is that, when we talk about a range, we are talking about a starting point and then an ending point. When we have a starting point and an ending point, it means that when we start from somewhere, we are going somewhere. That's basically what a range means. So basically, the theory states that when you are able to identify a range of a candle, and then the market mitigates or liquidates either the high of the candle, then that becomes the starting point. So the ending point will be the low of that candle. That is the layman way of explaining the theory. Okay. So all you need to do is to identify a single candle. That candle becomes your range. So technically speaking, every single candle on the chart is a range. Okay, but it's not all of them that go on to become a CRT, because the CRT has certain requirements as well. Okay. Right. So yesterday, we saw a buy on gold before the sell happened. So how did that happen? How did that come by? So as a CRT trader, I can start from the weekly chart, but because we are talking about the day's activity, I will start from the daily time frame. Okay. Yeah, but for next week, I have to start from the weekly candle to see how the previous week ended before I zoom down. Right. So I'll go to the daily time frame. Right. So on my screen, I have the candle coming from um Wednesday. And then also I see the candle coming from Thursday. And then lastly, the candle that formed yesterday. So because it says that every single candle.
Excuse me, sir. Okay. Please, I wish we can expand the view, or it's not possible for the candles to be a bit.
Okay, so I can do that. I can do that. Yeah. Yes, and then maybe. Yeah, I think this is good, right?
Yeah.
Okay. So this candle is coming from Ima. If you don't understand anything, you can ask me. That's the reason we are here. Okay. Don't let me skip anything without you get to
Okay.
it. Yeah. Okay. So, sorry. I think the blue color is fine. That will distinguish it. Okay. Right. So this candle, you see the blue, the one that I've marked blue. Okay, that's 3rd December. That was Wednesday. Okay. And then we have our Thursday candle here. This is Thursday's candle. Okay. And then this one is Friday. All right. So let me. Okay. So I want to show the move that happened yesterday, how it started. Okay. So when I opened my chart on yesterday, like when I opened it yesterday, I saw that there was a range. Okay, this is the range. The candle from Wednesday was my range. This one. Okay, this candle. This is the low of the candle, and then this is the high of the candle. So we have um CRT high, and then the base is CRT low. Okay. So this candle, the emphasis is on this one. So once you're able to identify the range, the next thing, this is what will make some of the candles valid for CRT and some invalid. So this is very important. It says that the next candle should sweep the low or the high of your range. So in this case, the candle swept the low of what? Wednesday's candle. So Thursday's candle swept the low of, where did I record it? Okay. So Thursday's candle swept the low of Wednesday's candle. Okay, so the second condition has been met. First of all, we were able to identify the range. Then the second is to wait for the market to sweep either the low or the high of what? That range. And we had it happening here. So the moment this happened, so yesterday, I had this on my screen before this candle formed. I had this on my screen. So I knew that the market was going to buy because the market has taken the low of this candle. This is the starting point. The ending point is what? The high of the candle. So it must go on to take the high of the candle. All right. So that explains the buy that we had yesterday. So how then do you enter the market? So we have what we call time frame alignment. Time frame alignment. The time frame alignment says that if I see the CRT on the daily time frame, then I should look for my entry on the 1 hour time frame. Let's pay attention to this one. If I see the CRT on the daily time frame, I should look for the entry on the 1 hour time frame. If we see the CRT on the 4 hour time frame, then our entry should be on the 15 minutes time frame. Okay. Now, the thing is that you can find a CRT on every time frame, but personally, I will suggest you stick to the daily and the 4 hour time frame.
And the 1 hour.
Yes, you can find them too. You can find them on 1 hour, 2 hours, and then all that. You can find them there. Yeah, okay. But personally, I would say stick to these ones. Yeah, okay. Yeah. I mean, for the 1 hour, maybe you can use it for the scalping. Yeah, because that would be a short. Yeah. Okay, so when this thing happened on Thursday, yesterday, I just zoomed to 1 hour to look for another block. So for me, I use other blocks for my entries. It's important we learn about them. Okay, so before I come here, let me do this so that we know where the candle is coming from. Okay, so this is let's go. I want this right. So I go to the 1 hour time frame. So I'm here, right? So it means that the Thursday candle formed somewhere here. All right. It formed somewhere here from here. Right. So you see that 12 o'clock and then it started coming. Right. So I told you I use blocked entries. Right. So all that I needed to do was to wait for, remember, this is our high and our low. Don't forget, this is our high and our low. Market swept this low. And so we are interested in this high. We are saying that market is going to buy all the way toward this high. That's exactly what happened. But let's see how that happened. Now, so what we have to do is to identify an order block. Okay. Now, I saw this whole space as a valid order block. This one, I saw this as a valid order block. So ideally, I can enter using the 1 hour time frame. Okay, I can enter here. And when I enter the trade, let's look at it. I take a long position somewhere here with my stop loss below this. Okay, and then this is my TP. The high is my TP. So that gives us what 2.72 risk to reward ratio. It means that because we are using the 1 hour, the risk is a bit higher. Okay. So
I have a question.
Okay, you can ask your question.
So, how do you mark your order blocks?
Is this coming from Ima?
Yes, please.
Okay. All right. So this because we are looking for a buy order block. We are looking at the last bearish candle that initiated the uptrend. The last bearish candle that initiated the uptrend. So if we reverse it, when we are looking for a sell order block, we are going to look at the last bullish candle that initiated the downtrend. So this is what I mean. You see that from this side, we had bearish candles taking over, right? And this was the last bearish candle that led to the uptrend. This candle was the last bearish candle that led to the uptrend. So that is my order block. So that's my my candle of interest. So I mark that. Is that okay?
Okay.
Yes.
Okay. Thank you.
That's fine. Now, I am saying that ideally, the CRT is saying that if we find the CRT on the 1 hour time, the daily time frame, the entry should be on the 1 hour. However, I have done this and I realized that on the 1 hour, the risk is too much, but it's still valid. So what I'll do is that I'm going to break the 1 hour further down to see if I can reduce the risk. Okay. So most of the time, I use 15 minutes for my entry. So I'll go to 15 minutes. Yeah, I'll go to 15 minutes. Remember, this was the block. Now, when I come to the 15 minutes, I am able to spot another order block in there. Okay, I'm able to spot another order block in there. So then I can mark this point. Yeah. So that's the beauty of time frame alignment when you understand what you are doing. So I am going permit me to delete the 1 hour order block so that it wouldn't confuse us. Right. So now I have simplified it even further. So I have this block here, and now I'm going to use that as my entry. So if I use this block as my entry with my stop loss below it, then targeting the same high. Sorry. Yes. Targeting the same high. Yeah, that's it. Now the risk to reward ratio is what? 4, which means that if we risk $50 on this trade, our return is what? $200. So now, if I have a big capital, $50 is nothing to me. So I'm going to increase it, right? It means I can increase my risk to say $200. If I am able to do that, then my target is $400. Personally, this is what I do. I risk $500 per trade, per position. So assuming I raise $400 for this trade, it means my target is 1,600. And if I should pick two entries from a single trade, I'm making how much? 3,200. You understand? Yeah. So that's the beauty of CRT. If you really understand it and know how to apply it well, you are going to get it. So this explains the buy on gold yesterday. This is where it was coming from. All right. So right from yesterday, upon the formation of the CRT, and for my ability to identify the order block on the 1 hour, and then eventually on the 15 minutes, I was able to catch the buy. And of course, I used 0.5. So I was able to make something significant. Yeah. I was able to make something significant. So that is how we traded gold yesterday. And you know the funny thing, right after the buy, we caught the sell as well. Yes, right after the buy, we caught the sell, and this sell was crazy. As for the sell, I use block entry, order block. That's why yesterday, was it yesterday that we had a meeting? I keep on saying yesterday. The day we had the meeting, I said that I use supply and demand a lot, but mostly I use CRT for my entry. So if I'm able to spot a supply zone or a demand zone, that one too, I apply it. So let's look at something. On the 4 hour time frame, okay, we realized that market had not swept this high, this side. Okay, it didn't sweep it when it was going down. In fact, it traded into the block and then gave us this sell here. But then it wasn't able to sweep it. So I knew that the market will make an attempt to sweep it. So this is what we did. When the market came up here, I suspected that it was going to sell. When it came back to this zone, I suspected that it was going to sell. Mind you, after that, the CRT had already taken the high, which means that we are done with the buy. And normally, this is what happens when the market accomplishes one thing. Most of the time, it reverses. I don't know if you have observed it, but most of the time, it reverses. So upon the sweeping of this, the high from the previous day, we were expecting that price will start declining. Then we saw that there was what a supply zone up here. So that gave us another confirmation that we are likely to see a sell. And if you drop it to the 15-minute time frame, it gave us this rejection candle. If you break it further down, 5 minutes, you see that yes, so the sales started from here. So upon the formation of these two bearish candles, I am positive that we are going to drop downwards. So from here to we took the sell. Yeah, ideally I would have taken it in the zone, but over there I didn't have enough candle confirmation. So I waited for it to print the second candle. Then I knew it was going to sell. And then we took the sell too. Okay, so we use the CRT for the buy, and then we use the supply zone for the sell. Okay. Yeah, so it's just a matter of understanding how the thing work, and then you stick to one. But then it's the CRT that I use most of the time. It's the CRT that I use most of the time. Yeah. Okay, so I don't know if you have any questions for me on that before we continue. I know that Clinton is going to be simple, but then maybe Ma, you have questions.
I'm getting it.
Okay. So yeah, identify the range, mark the high and the low, and then anticipate that price mitigates either the high or the low. If it mitigates the low, your target is the high. If it mitigates the high, the target is the low. So then we will be forced to ask ourselves this question. In that case, must we consider the trend of the market? Because if we are in a downtrend and the market mitigates the low, we are suggesting that we have to buy because of the CRT. Is that always the case? So the simple answer to that is that always look at the level that the CRT happened, where it formed. Is it a key level? By a key level, we mean that is there a valid order block? Is there a valid a fair value gap? Is there a valid maybe daily sweep or weekly sweep or something like that? Do you see anything like that? If you see those things, then irrespective of the trend, it will hold. Because you realize that when the market is selling, it doesn't sell throughout. At some point, it buys, right? Yeah. When it is buying, it doesn't buy throughout. At some point, it sells. Those sells and then buys comes as a result of what some of these conditions, the CRTs. Yes. So if you're able to spot them, then you can always trade the retracement and make something for yourself. All right. So I'm going to show you an example that I applied the CRT on one synthetic indices last week, and then I made over $3,000. I want to show you how I was able to spot it and how I used it. Okay. And in fact, it happened again yesterday, but because I was focusing on gold, I missed it. Yeah. I'll show you that too. Okay, so this one is very, very simple. When we are teaching it like this, it looks very simple. Yeah, I know, but it is simple. Trust me, it is simple. The only problem that I found with most of us is that we cannot wait. Even after we have spotted all these things, we are still in a hurry to enter. So it doesn't even get to our block we are in. It doesn't get to our level, and then we are in. You see, when you do that, when the market retraces, you find yourself in big loss, so you'll be forced to leave the market, and that is when um, you keep on losing your account. All right. So this is the synthetic indices. So you can use this if you want to access the chart. You go to charts.deriv.com. Charts.deriv.com. Okay. So all right. Okay. So before I show you that one, I had a setup on the platform. I posted something on volatility index 101x. I want to show you where it was coming from. Yeah. I posted this buy on the channel yesterday. I'm sure that if you are observing it, you have seen where it was coming from.
If you can enlarge the
Yeah. Okay. It is small. Yeah, I believe you
okay,
can
so
see.
I can spot one. I can spot one. The last bearish candle.
Who was speaking?
Clinton.
Oh, okay. Ima, can you see it?
Yes, please.
Yeah. So I'm going to. I sent it to someone yesterday. So I told you I have a group of traders. We share ideas together and all that. Yesterday I sent it to him. I want to show you before we even go into it. So you see, this was what I sent to him, right? You see the yes, and now let's go to the chart and see what it did.
I thought the range. Excuse me, please.
Yeah.
It should start from the bearish high.
You are right. I think I made a mistake. You are right. Yes, it was a mistake. Maybe I didn't. It's an oversight or something. I didn't see it. Yeah, I didn't see it.
Okay,
yes.
thank you.
Yeah, it should be that. It should be that. Yes. So we had the low and then the high here. Yes. So that was it. The low and the high. The low and the high. And you see the beauty, right? We had a sweep, then boom, boom, we are gone. And we are going to buy for a long time. Let me show you why. So I said that when you're able to, I have to zoom out so that I can do what I'm going to do. When you're able to spot the CRT, for you to know if the buy or the sell is going to be a big buy or a big sell, look at where it is coming from. And so you see that from here, right? From here, look at where we were trading from. You see that we have this big order block here, which even without the idea of the CRT, this should give us a buy all the way to the top, right? This order block, this order block, it should push this price all the way to the top. Yeah. So we have a CRT forming inside the order block. So now we have two confirmations that we are going to buy. That's what it means. That's what it means. So I was so sure that this buy was going to happen. And so I have this set up on the Telegram channel. And this is the idea behind it. So what do? It's what 24 hours. So you go to 1 hour. Right. So on 1 hour, unfortunately, this one, the structures were not nice, even though it played out, but the structures were not really nice. Yeah. But we can go, ideally, I will use 15 minutes for my entry. So let us see if there is anything interesting here. All right. So it didn't really give a very nice order block when it was going up. Yeah. So at the time that I saw it, it has already, because if you see the charts that I showed, you see that At the time that I spotted it, the third candle was already closing. This one, you see, this is also 24 hours.
Oh, okay.
Yes, I mean that it had already left the base. Yeah, the time that I saw it, it had already left this side. Yeah, because I saw it somewhere here, priced 9382. That's where I saw it. Yeah, so this was my entry. I joined, but I entered on the 15 minutes, right? So at the time I saw it, price was around here. It was around somewhere here. Yeah, it was around this side. So I used this block to enter this one. I used this one to enter this dawn. This trade I picked it this dawn. I used just one position and my target was $370 here. So I waited for it to retrace into this and then I picked the buy and my TP was here because I was targeting the high from the CRT. So right from here to this point, boom. I hit my TP. I woke up to $370 profit. Yeah. But ideally it's I should have got it somewhere down here. Yeah. I think yeah. I have this. So if I saw the move early, if I saw it earlier, I would have used the entry from here. I would have used it from here. Okay. Yeah. And then this would have given me a very big risk to reward ratio. But I didn't see it on time. Yeah. Imagine you catch it here with your TP all the way here. That's money. Yeah, that's a lot of money. That's a lot of money. It really plays out. It does. It plays out. It really plays out. Just like yeah. So if you're able to understand it well and apply it effectively, you are going to see results. I also have another setup there. Currently, I'm up by $2,768 from that trade. Yeah, yeah. I will share it with you. I will share it with you right now.
Like my next entry, I'm going to use about 10 lots.
Oh, no. I mean, we have to practice it to see how effective it is before. Yeah. So this is it. I am going to show it to you. That's a trade that I picked. I picked this. I picked it this morning. Yeah. Where is it? I picked it this morning. This is it. That's it. I think I picked it. What time did I take it? Yeah, so it was 10. Yeah, it was 10. That's when I picked it. It's still ongoing. I'm still holding it. I think the target is 3,500 or something like that. Yeah. And so I'm going to show you how I did that too. So you know that this thing that we are doing is really working, Charlie. It is working. That's why I told you. See, the other time during the meeting, I said that even if I lose $1,000 today, now I don't panic because I know that it is something that I can easily make. And so it's not like I don't lose. I lose some of my trades too, but then I know that either my next trade or next two trades, I'll be able to make up all the losses. So I don't really care about this emotions thing. No. Okay. That's the thing. Yeah. Right. So it says jump 50. So synthetics too, it plays out, and then because we don't deal with the news aspect, I would encourage you to give it a try. It's very good.
Okay. Yeah. The JD50, right?
Yeah, it's jump 50. Yeah, that's it. Jump 50. That's it. Yeah, so I think we have the setup on the platform. I don't know if it is this one. I don't know if I posted this one, but I posted a lot of setup. Okay. Right. So that one too, I'm sure you have seen it. Have you seen where I saw it?
Yeah.
Yeah. Oh, there is something about the CRT that I didn't mention. Let me use this opportunity to highlight that point. So this is the range, CRT high, CRT low. This is what the manipulation. Okay, so for the CRT, the first candle we call it the accumulation candle, and then the candle that mitigates the low is what we call the manipulation candle. And then mostly we would expect the third candle to be the distribution candle, but sometimes it distributes to a point and then the next candle will carry on. So I mean that it's not always the case that you have just three candles fulfilling the gap, like filling the whole gap. No. We sometimes have multiple candles doing that, right? So we have the accumulation here, this is the manipulation, and now this is the distribution. So we expect it to buy all the way to this level. We expected to buy all the way to this level. Now, even my targets, I was just targeting this high. I wasn't looking at this. So that one is what is giving me the 3,500. Imagine if I am to hold it all the way to this level. Yeah. Right. So I have okay.
Okay.
Yeah,
with the distribution candle, I didn't expect it to take the previous candle.
Yes. Yeah, excellent. That is an excellent observation. So normally that shouldn't happen, but you know that in the market,
anything
can happen. Yeah. So this is what I do. It's a good point. I'm glad you asked it. So let's say I use the CRT and then I take a stop loss. Do I end there? No. What I wait to do is that I wait for the market to trade back into the range. Then I join again because I know that it will fill the gap.
Okay.
Yes. So definitely using this, it would have hit our stop loss. Definitely. Yes. It would have hit our stop loss. So I just wait for it to trade back into the range, then I find my entry and I'm good to go.
Okay. I thought maybe when you took out the low, it becomes invalid.
Not entirely. Not entirely. It's also okay. So it depends on how this candle will close. So let's say that when it took out this low, the candle went on to close below the low. If that didn't happen, then it is invalid. If this candle, if it went on to close below the low of this candle, it means it's invalid because the tendency that we will have the subsequent candles going down is very high. Yeah, so if it fails to do that, then it is still valid. Yes, it is still valid. And then you know that sometimes market will just sweep your low, it will just sweep your high, and then it will come back, and fill the gap. So it is part of the yeah. So we had this, then we go to 1 hour for entry. Okay, good. Good. So you see it. This was the low from the sweep. This one, this was the low from the sweep, and then this is the low from the current candle. Yeah. So you see that it didn't really go far when it took it out. You see it. So it is this one that you enter the market and then you hit the stop loss. Once it hits your stop loss, then it starts going in your favor and say, I didn't monitoring my trade or something. It's normal. It's part of the game. It happens. Yeah, it happens. But you see that what I mean to say is you see it just moved some few pips away from it and then it came back into the range. So this was it. I spotted it this morning and then I did this. I marked this OB. All I waited for was for price to trade into it, and then I take my entry. Yeah, so I used the limit order. I placed the limits there, and then it came to pick me, and I'm targeting just this level, just this thing. So imagine if we are going all the way to the, we are going all the way to this level. Yeah. It doesn't. So it just came to pick me, and then we are going. I just hit this, and then I'll be gone. I'll leave it. All right. So the CRT it really plays out, and it plays out a lot. in the synthetic market, if you know. So say you take like 10 trades, maybe you will lose some, maybe you can lose like 2 or 3, but most of them, if you got it right, you will get it. Yes. And the beauty about it is that it gives you significant risk to reward. So if you follow it keenly, you see that you will always be profitable. Yes. You will always be profitable. Yeah.
So mostly if I'm to use the CRT, I should be targeting where it's going to perform. I should be targeting key levels where other blocks that side. That's where I should be targeting.
Yes.
The CRT should be formed.
Yeah.
It plays out mostly at that point.
Exactly. Yeah, it does. Yeah.
Okay.
Yeah. So currently, I told you last week I made over 3,000 on one asset. I want to show you where I caught it. And yesterday, the same thing formed, but I wasn't there to pick it. It pained me a lot. Yeah. So for last week, I used the 4-hour time frame, and then this is it. This is it. We have it here. This was the level. This was the high, and this was the low. You see it?
Yeah. Yes, please.
Yeah. Let me increase the size. Yeah. So this was it. Yes, this, you see the range, then the sweep all the way, boom. You know the funny thing, because I knew where the market was trading from, I didn't even pick the TP here. I held it all the way to the
wow.
Yes. I held it all the way to the bottom. That's why I said that when you see where the CRT is coming from, you will be able to know where it will buy to or it will sell to. Yeah, you'll be able to know that.
Wow.
Yes, and then this current sell is also as a result.
Currently, I think it's printing the same thing at the down here.
Yes, this the bottom.
Yes.
And so yes, that's excellent. So we know where it is going. And as a matter of fact, we said that it should happen around the key level. We have what?
Key level.
We have this low here. We have this low here. This is our third low on 4 hours. This is a key level. This is a buy, nothing more.
Yeah.
Okay.
Yeah. So yesterday it happened again. Let me show you. So I told you that you find it on daily time frame and then 4 hours. But sometimes the what do you call it? The time frames within them too, you can spot them. So yesterday I saw this on 8 hours. Over here, they give us access to the 8 hours. Okay, do you see it? Where the sale started from yesterday? We have it here. A beautiful high. And then a beautiful low. And how did I know that it was going to sell all the way to the bottom? It was coming from here. We have
this supply zone.
Yes, we have this supply zone tracing to this retest here. So ideally, this was a complete retest for a sell. So definitely we were going to drop. So you saw this thing. You're never going to let it go. Yeah, that's it. And beautiful, you go to 15 minutes, you see the nice entries there. Yes. So on 15 minutes, you see you can use this retest to enter. We have it here, a small rejection here. You enter here all the way to this level.
Then there's some technical hitches to the sound.
You don't get me?
Yeah.
Oh. Is it better now?
Yeah.
Okay. So I was saying that you could have targeted the low. Okay, that will be just your target. You enter here with your TP here, you are done. You enter here, your TP here, you are done. Or because we know it is coming from a supply zone. For me, I will not let it go. See the gap? Yeah, we have this crazy sell here. Yeah, yesterday somebody made $500 with $180 using this.
Wow.
Yeah, from here, just pick the sell from here and then held it all the way to the bottom. So the CRT, it plays out a lot. It plays out
on every instrument.
yes,
for currency.
Even crypto, we use it. Crypto, we use it there.
Okay. That's it.
Yeah.
Very nice.
Yes. So yeah, that is it. I can go on to show you series of examples and then all that. Yes. But at the end of the day, the idea is the same thing. Identify the range, wait for the liquidation, and then you start looking for your entry. We use other blocks, but sometimes your entry can be a fair value gap. It doesn't matter. Yeah, it doesn't matter. And there is one thing about it that I didn't mention. It also makes use of the discount zone and then the premium zone.
Okay.
Yeah. So you see that this is the high and this is the low. So the theory states that if you meet the price in the premium zone, then you can take it. If you meet it in the discount zone, you can still take it, but now the risk is higher because it can reverse.
Yeah.
Yes, so always make sure that you are catching it within the premium zone. Yes, always make sure you are catching it within the premium zone. Yes, sir.
Please, I don't know what's discount zone and
Okay. So you see, we were able to identify the range, right? This is our range. Okay, this is coming from the 8-hour low and then the 8-hour low and the high. So this whole thing forms the range. So you divide the range into two. Divide it into two. Okay. The top part is the premium zone, and then the bottom part is the discount zone. So let me do that for you. Let me check. If we sell from here, we have 1.44. So it means that the midpoint will be okay. That's crazy. Yes, so if I had taken the sell from here, my stop loss would be here. I mean, this was the retest. Okay, so I'll take it here rather. Please let me go back to the 8 hours to mark the low well. The high. Yeah, this is the high. So let me go back to 15 minutes. Okay, good. Right. So this is the high, then the low. And I'm saying that I was going to enter here using this one, right? And that's giving me 4.98. Let's take it as 5. Let's round it to 5. Now, if we divide 5 into 2, that's 2.5. So it means that the midpoint will be 2.5. So if I should enter here with my stop loss, the same point, where will be 2.5? That's just it. I move to 2.5. Okay, so somewhere here. Oh, I got it. Good. Somewhere here is my midpoint. So I can do this. I can put a line here. Sorry. I can put a line right there and say that the top part is my premium zone and then the bottom part is the discount zone. So this is premium. Yes. And then this is discount. So he's saying that when you meet the market within the premium zone, then you can take it. Here, the likelihood of you winning the trade is very high. However, if you meet it in the discount zone, it is almost done hitting the low. So here the chances of you winning has reduced. Okay. Yeah. So yeah, so it is recommended you pick it within the premium zone than in the discount zone. Yeah. Yes, that yeah. So most of the time I would like to pick mine in the premium zone. For me, I even want to catch it right from the onset, unless I don't see it on time. Yeah, but if I see it on time, I want to catch it right from the onset so I can target more. Yeah.
I see. I believe you can use the Fibonacci.
Yes. You can use the Fib tool to also
Okay.
that. Yeah, you can do that. Yeah. Mm-hmm. So yeah, that's the challenge. It works, and this one I would say just like any other system, every system works. Yes, but your patience and then practicing to get it is going to help you a lot. So from here, this is what I want us to do. Let's go to the charts. Right now, you have your derivative accounts and then all that. So I think is it Collins? I think you are doing your KYC. You sent me a screenshot.
Clinton, yes.
Okay, you send me that. How far with it? It should be approved by now.
They are saying that 1 working day. I should give them 1 working day, but I've not. I don't know.
Okay, then
maybe on Monday because it's weekend. I don't know if they're going to respond or they're going to verify it for me.
Yeah, most of the time, if there is an issue with either the ID, like maybe it is blur at some point or something, that's when they don't do it instantly because within 5 minutes it should be verified.
Okay.
So let's wait till Monday. If it is not, I'll show you how to go about it.
All right. Thank you very much.
Okay, you're welcome. So let's set up our account. You can, try the demo and see how it goes. Then maybe we can do some. But then we share setups and signals, so you can load your live account as well, and then you can pick them. Yeah. So aside the Telegram channel, I also send the setup privately. Yeah. So sometimes I'll be sharing some with you. So.
Okay. Thank you very much, sir.
Okay. You are welcome. Right, so I recorded this. I will make it available and share it with you.